Welcome back, metalheads. This is Brad with your daily No Bull Precious Metals report for July 16th, 2021. Well, we finally made it to the end of the week, and what a week it has been. A lot of numbers have come out. We've seen metals get pushed and pulled up and down throughout. Despite an odd assemblage of data released by the Fed showing some improving trends, like in unemployment, and some positive numbers coming out of places such as New York for the manufacturing numbers, we did have some bad indicators as well. Overall, the economy is in a tough spot, and an additional $3.5 trillion in new spending is coming down the pipe. Whether you agree with it or not, that level of spending will not go without effects. We're going to feel it somewhere, somehow. I mean, a few centuries of economic theory can't be wrong, right? We saw Fed Chair Powell spend 2 days on the Hill testifying about our economic situation, and somehow metals mostly went unfazed. There are some exceptions to that, which I'll get into shortly, but I can't say the same about equities. However, that's a whole other story and a whole different channel. So by the time the dust settled last night, the entire metals sector finished on the upside except for palladium. All the major equities finished down except for the Dow, which booked a 0.06% gain. However, early in the morning, this reversed course in overseas trading and the sector took a plunge. Overall, given the performance at mid-month, having some gold or silver tucked away as an inflationary hedge is looking better and better despite the momentary unpleasantness. More and more this year is beginning to look like 1980 all over again. Maybe it is time to dust off the old parachute pants and whip out some Run DMC and start doing some turbo spins, because it looks like Mr. Carter is back in town. On the schedule today are 4 great reports that cap a busy week. We have retail sales excluding autos, consumer sentiment, and business inventories. Overall, the big board is mostly green. Silver is down, gold is down, retail silver is down, and retail gold is up. On the big FinViz board, we have mostly positive days. The equities are showing positive, and word on the street is that most investors are tending to disregard the early earnings numbers and instead looking towards a broad view of the economy. That was what really drove a lot of the downward price movements yesterday, but today we're not really sure where that's going. The investor sentiment makes a lot of sense and could be signaling an acceptance of the recession we're in. So it's possible that the major indices and the component stocks that are part of those will ultimately start to be tempered by a lot of this sentiment. A secondary reason is surmised to be that Powell signaled an end to the Fed buying corporate bonds and securities by ramping down the $120 billion per month pandemic emergency stimulus that was earmarked for that purpose. Essentially, that program provided free money for absolute liquidity within the markets, and it really served to prop up a lot of the equities and corporations that were essentially dumping cheap debt onto the Fed. And with that drying up, that will have an outsized impact on the fundamentals. You can't just keep on doing that and expect no response. In light of all of that, but when you see a morning that opens like this, it's hard to pin down exactly what or even if investors are actually thinking. Now, as we dig into the individual sectors, we're seeing that the energy sector is mixed at this point. We have riding mostly positive. Well, it's all positive, but it's really close to zero, except for natural gas and ethanol. We see grains, which are kind of another counterpart on this. We're seeing those in significantly green territory, which is great. And then finally, our metals sector, after overnight trading, is performing mostly in the red. Copper is the one holdout at a plus 0.07% gain. However, palladium is down by almost a 1.5%. Platinum is down by almost 1.25%. Silver is down by almost a whole percent. And gold is down by almost 1/20%. Today's reports, as I already mentioned, are supposed to have slowly trickled in. But I know from accessing it throughout the week, the Fed is getting pounded and their systems have been flighty for data access. That could be why I'm without today's numbers yet. I will update in the comments when those come in and see exactly where they're going. But right now, the best I can do is really show what we're looking at and how we're looking at it. So I'm going to highlight what we're dealing with today. And what we have is retail sales reporting for the June period. And we're looking at trying to overcome a negative 1.3% drop. Analysts are predicting a negative 0.4%. So that would be an overall increase, but it's just a slowing rate of decline. The next report that I'm still waiting on is the retail sales excluding autos. And that is just a subset of the overall broader retail sales, which we're currently looking at. The previous month was negative 0.7%, and analysts are predicting a positive 0.4% growth. We're also waiting on the Consumer Sentiment Index for July, which that was in the previous period 85.5, and analysts are expecting it to grow to 86.3. We'll have to see how that goes. As well as the final report being business inventories. Analysts are expecting a 0.5% growth, whereas last period there was a 0.5% growth. So they're looking for a flat growth on that, and we'll have to see. I think that there is going to be a slight decline, however, just in light of the numbers that we've already seen. The way that industry has worked, as well as digging into the reasoning why the Empire State Index was as high as it was, as well as some other factors. So I think that the best that we can really hope for is that it's going to be flat, but I really tend to believe that it's going to be down a little bit just because of what I've already seen. But who knows? The 10-year Treasury yield has suffered another downturn. After a few days of an improved number, we ended yesterday with a 1.32% rate. We also widened the spread a bit from 0.4% the previous day to a 0.6%. This puts us 21 basis points below the average and 25 basis points below the median on the 3-month window. Yet another sign of something rotten in Denmark. In the silver market, we spent most of yesterday on a nice upward swing, at least in the context of silver, that is. Hit the low for the day at around 8:45 a.m. with a price of 26.285, and from there climbed from bouncing off the 5-day VWAP to finally close out at 26.43. This movement traversed both deviation bands, and if my estimates are correct, put above the territory of a +3. In the overnight trading period, the price held on the existing trend until approximately 1:30 a.m. When the price dropped finally. The decline established a new downward trend that continued into this morning. Through an early morning reversal that began around 7:30 a.m., this might indicate the U.S. market will have none of those shenanigans, however. We'll see. If the current price action is any indication, though, it could be a long oscillating day, but we'll have to see as the day develops. Turning to gold, we saw 2 whole days with the price riding above and often well above the +2 deviation band. Between 10 a.m. and 11 a.m., the price briefly moved lower to ride the +2 level, but then popped up again. And we can see that right here on the board. When the price finalized for the day at 18:30.30, it was sitting well above the 5-day, the previous day, and the intraday VWAPs. That puts the price in strong territory for upward movement as we work through today as the U.S. markets get back in the game and into next week. However, gold commenced to have its own reversal of fortunes during the 7 o'clock hour last night, so I was very premature in the analysis. This eventually led all the way from the lofty heights it was occupying in the 1830s down to meet the VWAP at a low of 1817. Like silver, though, the awakened U.S. market did not like the price there and moved it back to where we see it now, which is currently riding right around 1825. Of course, every movement that goes on is highly dependent on whatever random bombshells drop over the course of today, and where we're going to wind up heading towards the weekend. I do feel pretty bullish on gold, though, right now. It seems to be doing pretty well, even if it is in slightly negative territory. On the 5-day performance, we can see that both gold and silver are potentially primed to finish the week in positive territory if the day's trending recoups the losses from overnight. At market close last night, silver was up 0.86% on the period, while gold was up almost 1.25%. This morning, we are well off that mark. Silver is currently in negative territory at negative 0.17%, and gold is actually still maintaining its positivity, and it's gained a little bit. It's at 0.91%. But we'll see if these losses remain and where we actually finish out the week. Hopefully, at the very best, we can break even on silver, but I'm still rooting for a positive finish. The gold-silver ratio is still mixed. The strength of gold in light of the not as strong performance of silver keeps pushing those ratios into uncomfortable territory. The market-to-market ratio is still under 70, but at 69.76, it's a bit close for comfort. The retail to retail, again using an aggregate average of the retail price of generic silver to the retail price of generic gold, is 61.49. As I've pointed out all week, this is entirely due to the retail price disparity. While silver has had a 3-week decline in prices, gold has continued to push higher. As those differences play out, that ratio becomes less attractive. Remember, gold moves in dollars while silver moves in pennies. That all begins to add up. Making our way to retail silver, it's an old, well-torn story right now. We are still seeing the current week pricing falling well below last week and the previous week in some cases. Given that silver commodities are actually up compared to this time 2 weeks ago, the price is definitely lagging. In fact, almost all prices except the Philharmonic are averaging lower than they were 2 weeks ago. And as we can see, generics are currently at 31.35. They're riding about 10 cents lower than previous 2 weeks at 31.45. The Philharmonic, as I had mentioned, is up at 32.93 compared to 32.76 2 weeks ago. As we look at something like the Maple at 35.66, that's a whole 6 cents under where it was 2 weeks ago, 35.72. But what's also important to look at, which I normally don't identify too much, is the junk silver ratings. And as we can see, the price 2 weeks ago on junk silver was $32.55. Now it's declined down to $31.71. So that is actually a pretty good drop, and probably one of the larger drops that we've seen within silver itself. So as always, I mean, I'm a junk silver fan. It's one of those things that I like to collect, and it's definitely one of those values that you have to watch out for and really look at. It's not the cheapest silver, obviously based off of the conversion price, but you do see a lot of price movement within it. So talking largely, this price decline plays out on the average daily chart as well, and we can see this. There's a very distinct downward trend. We can see where the lowest price actually bottomed out somewhere around $30. And even now, we're seeing a current regime that's going into $30.13. If you're a buyer, this is a good time. We're seeing some of the cheapest prices that we've seen in quite a while. Well, commodity pricing is actually gradually moving higher. And we can kind of quantify that despite the daily issues. If you're a seller, you're probably going to be facing more pricing pressures. It's just the nature of the game. Buyers are going to want to buy cheap. Sellers are going to want to sell high. Now it's kind of, as prices are declining, there's perception that prices are going down, and that's going to create pricing pressure. So if you're a seller, be aware of that, and I apologize for the bad news. With retail gold, we're definitely not treading new ground this week. The prices continue to climb, on the week over week view, and after this long, I'm comfortable calling it a trend. Even generic gold is breaking the 1900 mark, and the gold buffalo coins are in the healthy $2,000 range. Even if you had the cash laying around, a 10-ounce bar isn't going to save you a whole lot, ounce for ounce. It's only about $4 under where the generic is. It's not a significant discount in premiums for the amount that you're spending. If you happen to be in that market, you're looking for things that are larger. So if you're looking to drop, $18,000, $19,000, or if you want to up that to a 100-ounce bar, let me know, show me pictures. I'd love to see that. But you're going to have to shop around for the discounts. And gold is definitely a premium object right now. So hopefully you bought early and often. That is going to do it for this report and this week. I hope you've made some good investment decisions and added a little to your stack. Next week, we can expect numbers on houses and building throughout the week, with market manufacturing reports to round out our Friday. We also have a metals delivery week. So with that, the major focus will turn to both September and Q4. I expect many of the numbers that we've seen this past week and that I've identified are going to start taking full effect, and they're going to start driving a lot of the activity as we start heading towards the end of the year. If you enjoy these reports, please consider lending support. Likes, shares, and comments help feed the YouTube machine and help build the audience for true no-bull analysis. And the best part, they are free. It also makes me happy when I browse my analytics page. You can also check out my ebook on silver stacking. In it, I try to cut through many of the myths and cruft that surrounds the hobby. And if you've been in it any length of time whatsoever, you know exactly what I'm talking about. I won't give away the ending, but you'll be surprised to find out who's behind it all. And if you use coupon code STACKSILVER, you can save 25% off the cost. Doing so will help me buy the coffee that fuels these reports. So until next time, have a great weekend and happy stacking.